Hey guys, do you know what excites me in the stock market? It is the compounding effect which excites me in the stock market. Do you want your money to be compounded? Then you're at the right place to learn the basics of the stock market. So here we go with the first lecture, Stock Market Basics Introduction. Disclaimer: this video is for educational purpose only and not recommendation for any investment purpose. So let us start our lecture with the question, why should you invest in stocks? So I'll be giving you the answer. I'll be mainly giving you two reasons for you to invest in stocks. The first one is to beat inflation, and the second one is falling FD rates. This sounds quite annoying, but let me simplify it to you with the definition of inflation. What is inflation? Economically, in economic terms, a general increase in the prices and fall in the purchasing value of money is called as inflation. There is a simple funda in economics. If there is an increase in the if there is an increase in the demand of a particular goods, commodities or services, and there is decrease in the supply, then the value or the price of that goods, commodity or that service will increase. This is known as inflation. Inflation arises due to supply and demand. When there is less supply and more demand, then inflation is taking place. We say inflation is increased when demand is more than the supply. We say inflation is decreased when the demand is less than the supply. So day by day, the value of the money is decreasing because of inflation. Let us just see comparative inflation rates in the country or in the world. Inflation rates is comparatively more in underdeveloped than developing countries. Inflation rates is comparatively more in underdeveloped developing countries than the developed countries. I will give the reason for this. In underdeveloped and developing countries, they are developing, they do not have the infrastructure. They are like, for to meet their demands, they are importing the goods from outside countries. So inflation rates are high in these countries than the developed countries. In underdeveloped and developing countries, the demand is more and supply is not able to satisfy the demand, so inflation rates are more. In India, as India is a developing country, the inflation rate is around 5 to 6%, whereas in USA being a developed country is having a rate of inflation just 2%. As a public, as a individual, we should beat inflation. What does beating inflation means? Our returns should be more than the inflation rates so that we will have a positive return. Our returns should be more. Our returns means the amount we have invested, the amount we should get back, so that it would be more than the inflation rates. So there are many ways through which you can beat inflation. One is investing in the golds, but golds on a large extent will not give you so much returns. The second one is you can invest in FDs. So what is the problem with the FDs? FDs means fixed deposit. In around 2010, FD interest were around only 10 to 12% in India, and the inflation was also more than 10%. You should just understand it. Inflation was more than 10%, FD rates were also more than 10%. Now our country is progressing and we are becoming self-independent. Now we are limiting the import of goods. So inflation rate is also reducing. Now it is around like 5 to 6%. So is the case with the FD rates coming down to 5 to 6%. When the inflation rate was more than 10%, FD rates were also more than 10%. Now inflation rate has become 5 to 6%. FD rates are also coming down to 5 to 6%. So in the future, there is no chance of increasing the FD rates. So FD rates is also not an option for you to invest. Also, there are 30% you have to pay as an interest tax to the government. 30% you have to pay to the government as an FD. So merely you'll be getting around 3 to 4% interest, which is a negative growth. So FD is surely not the option. Then what is the next option? You can invest in real estate. But real estate, there are mainly three problems. One is the liquidity, and one is the capital investment. You will not be having so much capital to buy the property or the assets. The third one is they will be giving you a positive income but not as extent as stocks. So the best option is to invest in stocks. So investing in stocks is the best option to beat inflation and falling interest rates. Beating inflation will surely plan and secure your future financial requirements. Requirements may include everything. It may be marriage, children, retirement, it may be anything. So investing in stocks is the best options, and it is proven that in investing in stocks gives you great returns over the long horizon. I'll be repeating this sentence. Investing in stocks will give you great returns only over a long horizon. Long horizon means you should invest in stocks for a long period of time. I would like to end this session by giving a quote. Rich becomes rich because they invest in stocks, whereas poor becomes poor because he cannot beat inflation. Rich becomes rich because they invest in stocks. They invest their money in stocks and they can beat inflation. Whereas poor becomes poor because he cannot beat inflation. The value of his money goes down, which makes him still poor. So I wish all of you should invest in stocks so that you can have a positive income and you can make your future life financially secure. Thank you one and all.